All right, so good morning, everyone. Welcome to our year-end webinar. Welcome back if you've attended it before, but we're going to cover very similar topics to previous year webinars. I trust that you guys can see my screen. And first of all, we always want to thank you for joining us. All participants will be muted during the webinar. We're utilizing Teams for our webinar. We did this last year as well. So feel free to type your questions into Teams. Use the Q&A button. We have some team members on hand that will be monitoring the Q&A, and they will address it as time permits. We'll also be providing a Q&A sheet for all answers, and we'll be sending this to you along with the presentation and the recording. And if you happen to think of any questions after this webinar is over, feel free to reach out to your support representative, and we'll be happy to address those then. So our first order of business is the CTR holiday schedule. So for our upcoming Thanksgiving holiday, Thursday, November 28th and Friday, November 29th will be closed both days. If you normally process your payroll on Thursday or Friday, then please submit your payroll by Wednesday, November 27th. And when we say process, we mean you're logging into iSolved and you're clicking the button to submit your payroll on a Thursday or Friday. So not a Thursday or Friday check date, but a process date. The ACH files will be transmitted as normal on Friday. Friday's not a banking holiday, so the bank will still deal with direct deposits or tax files that we send, etc. For the Christmas holiday, this will be dealing with both December 24th, Christmas Eve, and the holiday itself, December 25th. We will be closing early on Tuesday, December 24th, Christmas Eve, and we will be closed the full day, of course, on the holiday, December 25th. If you normally process your payroll on Tuesday or Wednesday, then please submit your payroll on Tuesday by 11 a.m. If you cannot meet the 11 a.m. deadline, then please notify your customer support representative by Friday, December the 13th, so that we can make any additional accommodations. This is mainly because we are going to be closing early, and we'd like to have a heads up if you won't be able to make that 11 a.m. deadline for submitting your payroll on Christmas Eve. Let us know, and we'll go from there. Our ACH files, our bank ACH files, will be transmitted as normal on Tuesday, Christmas Eve. And then for Wednesday, January 1st, the New Year holiday, will be closed that day. If you normally process your payroll on Wednesday, then please submit your payroll the day before, Tuesday, December 31st. And our ACH files will be transmitted as normal on that Tuesday. So how is my payroll affected due to the holiday schedule? If you're processing your payroll and the date falls on Christmas or New Year's, refer to your payroll run schedule to see the specific impact to your company. Also contact your payroll support representative if you want to use a different pay date prior to entering your payroll data. So, if your pay date falls on a Wednesday and you want to move it to a Tuesday instead, then please reach out to your support representative and we can make that adjustment. The system can make that adjustment as well. So that's why we recommend that you look at your payroll run schedule to see what the system currently has planned or what it's showing right now. But if you need to make further adjustments, then please reach out. If you attempt to process your payroll after your scheduled processing date, the system may prohibit you from processing it and the payroll must be pushed through. Please make arrangements with your payroll support representative prior to the holidays so that we can be sure your payroll is timely processed. And failure to process by the established deadlines may result in additional processing fees. So again, just make sure you're keeping these holidays in mind. And, if you have any changes, then please reach out to us or questions. Going paperless. We ask that our clients that receive a payroll package to consider following the following options as we navigate the holiday season and flip the calendar to 2025. Signing up for employee self-service. This will allow employees to access their direct deposit vouchers online. This is a win for everyone, and shipping fees can be reduced or in some cases eliminated. Encourage employees to sign up for direct deposit. This is another win for the employee as it's convenient. They don't have to make a trip to the bank to cash their check. It also guarantees that employees are paid on time. If the employee does not have a traditional bank account, then that's not a problem either. You can ask your customer support representative for information on our pay card options. These options, they're easy to implement. And if you'd like to hear more, again, feel free to reach out to your representative and we can go from there. The federal unemployment, which the FUTA tax we call it, the credit reductions. Now you may be familiar, this has been going on for a couple years now. Um, for the first point, to kind of sum this up, states normally receive a credit reduction to their FUTA tax rate, where employers only need to pay 0.6% of the tax on employee wages up to a $7,000 wage base. So once the person crosses a $7,000 threshold for the calendar year, you no longer have to pay the 0.6% rate. Many states borrow federal funds to pay for unemployment benefits, and since the states did not repay their loans to the government, their FUTA tax credit is being reduced. So the states affected by this reduction this year are California, New York, and the U.S. Virgin Islands. So if you have employees who work in these states, as in they're subject to the unemployment taxes for these specific states, then your company will need to pay additional FUTA taxes due to this credit reduction. Employers will need to pay an additional 0.9% tax on each employee who works in these states, except for the U.S. Virgin Islands. So the 0.9% is basically applying to California and New York employees. This is up to the $7,000 wage base. So the wage base remains the same, but you're paying this 0.9% in addition to the original 0.6%. So grand total for California and New York, you're paying 1.5% FUTA tax. This additional 0.9% basically means that you can pay up to an additional $63 in FUTA taxes for each employee in these states. And for the U.S. Virgin Islands, they obviously have a lot higher of a percentage. They're going to pay an additional 4.2%. These additional taxes will be collected sometime in December. We'll keep you posted on the scheduling. And also, of course, be advised this could cause a significant increase in your payroll tax collection due to the additional tax liability. So if you have a large amount of employees in California, New York, or the U.S. Virgin Islands, definitely make note of this because, it could be a significant amount of taxes you're going to be paying. The payroll summary report that we produce with each payroll run will have a separate line item showing you the additional FUTA taxes being collected. So, once this collection takes place, you can reference that line and see the amounts. And the credit reduction could potentially happen again in the coming years if the states do not repay their loans to the government. So as I mentioned, California and New York, the U.S. Virgin Island, they were affected by this last year. I believe the year before as well. The U.S. Virgin Islands has been on this list for multiple years. So just something to keep in mind as well. Important dates to remember. All adjustments made after Friday, December 27th may result in penalties from tax agencies, and CTR may charge additional fees for correcting or revising returns. So you want to make sure, and we'll be covering this in the coming slides, any kind of year-end, maybe special pay items, fringe benefits, bonuses, etc. You want to have all that submitted by Friday, December 27th, so we can keep the adjustments or the coming pay date within 2024. We will also be processing quarterly returns and printing W-2s on Thursday, January the 9th, 2025. All payroll runs and adjustments and changes must be processed by January 8th, 2025 at 5 p.m. Eastern. So, we still want to stick with this Friday, December 27th deadline. If you do have any emergency changes, you do have until January 8th, but waiting that long could put you at risk of penalties from various tax agencies. So we strongly encourage, you to stick to this December 27th deadline. Please reach out to your customer support representative if you need any assistance. So taxes can be so taxing. We're happy to assist our clients wherever possible, but we cannot advise on tax matters. Tax decisions should be made in consultation with your company accountant, your CPA, or tax attorney. And when a special pay item is presented to us that requires special taxation, we will configure the pay item according to your direction within the bounds of the software. Employee information. If you hired any new employees in 2024, you should verify their social security number, their full legal name, and it should match their social security card as well. So keep that in mind. The employee's address, this should be a physical address, and some taxing agencies do not allow PO box addresses. This is a particular sticking point with here in Pennsylvania with the local tax agencies because they will send notices, sometimes reject returns if an employee has a PO box address on the return. So always use a physical address. Even if the person lives somewhere, maybe that's slightly remote and they can't accept mail at their home address, they still should have a physical address. And that's the address you want to use on their main screen in iSolved. Now there is an option, there's an override address option in iSolved for PO box addresses. And this is a path here, employee management, employee maintenance override address. And here's a little screenshot of what that section looks like. So if the employee can't take mail at their main address, this is where you can put their PO box address. And you can also specify that the PO box address can be used for their W-2, their 1099, ACA, etc., and then be used for paychecks. So you have these options. If you're going to drop the employee's W-2 or 1099 form in the mail, it'll actually use the override address and the PO box or whatever you put on this screen. The main screen, the screen we're saying to use their physical address, that physical address is what shows up on the PA local tax returns that we file to the agencies. So that's why it's important to have their, physical address on the main screen itself. Another point to keep in mind is ITINs, basically social security numbers beginning with a 9. As an employer, you should not be accepting these. And this is from the IRS. The I-10 should not be accepted in place of a social security number for employee identification, nor for an employee to work in the US. So we've seen multiple state unemployment agencies actually reject our quarterly tax returns because a person has an I-10, because they don't consider that, again, under the IRS rules, a person who's legally able to work in the United States. So if you do have employees in the system with an I-10, work with them to make sure you get a social security number for that person. And of course, look at their social security card and make sure everything matches. If this information, oops, sorry, let me go back. If this information is inaccurate following the January 8th, 2025 W-2 review deadline, you may be required to pay for W-2C and amended return fees. So again, we stress that you begin reviewing this information now if you haven't already. So employee information. After each payroll, the following report will identify employee tax items that need attention. It is reporting, reports archive, exceptions report, and view and download the report. Many of you do this already. This exceptions report is generated with each payroll, and we always encourage you to review this, see if there are any tax exceptions or variances, and some of them they don't need to be resolved, but always review them, bring them up with your customer support representative, and then we can take a second look and see if we need to run any adjustments, or maybe it's something minor that we can leave as is. But either way, just take a look at it so we make sure we cover all the bases before the year is over. State unemployment rate changes. So this is a time of the year where the various tax agencies are sending in unemployment tax rates for year 2025. When you receive a rate notice from any state, please send it to us promptly. The notices can be sent by email or fax to your customer support representative. And to expedite the handling of the notices sent by email, please use this as a subject line, 2025, whatever state abbreviation, and then SUI rate for your company ID. That'll help us, quickly identify the ticket and make the changes in our system so that the rate is ready for the new year. The rate on file for your company determines the amount impounded for this tax. So if the rate is not provided to us until sometime after its effective date, this can have a large impact, since the first dollars earned in the year will be subject to the SUI tax. So to kind of sum that up, if you do not provide us with the 2025 SUI rate, our system is just going to continue using the rate we had for a previous year. And if the agency increases your rate for 2025 and we're not aware of it, there's basically you're in danger of having the tax under withheld and underpaid. So make sure you send the rates over to us. If you don't get the rate to us until say mid-January or early February, the system will catch up. So if the rate increased, we will catch up the additional amount we need to collect on the following payroll. And if it decreased, we'll refund, whatever needs to come back to you on the following payroll as well. But ideally, just send it over as soon as you can so we can get the ball rolling. Our secure fax number is this here, 866-748-1412. So bonus and special pay runs, these payrolls must be processed before on December 27th. Please request and process as early as possible, especially if this will be done as a separate payroll run and not part of your regular run. And these are some points to consider with these. If the total taxes for your special or bonus run will be larger than your normal tax amount, we may need to make special arrangements to fund those taxes. Will you use a regular tax calculation for these pays, or will the supplemental federal and/or state rates be used? Will these pays be separated from regularly scheduled paychecks? Will these pays be separated? Sorry. And will you allow these to be paid via direct deposit, or do you want only paper checks to be used? So sometimes, if a company is paying bonus checks for Christmas, they want them to be live checks as opposed to direct deposit. So, that's mainly what that point is about. What about deductions like your 401k, 403b, retirement deferrals, etc.? Will they be allowed on these checks? If so, remember that varying the withholding just for this pay could be difficult. Will there be special delivery instructions for any paper checks in particular? So if we're going to send them to a different address, maybe if your office is closed for a week for the Christmas holiday, let us know if there need to be changes with that. If your bonus exceeds your approved ACH limit amount, you may be asked to wire the fund or provide proof of funds. So if it is a large bonus, and this kind of touches on an earlier point, about the runs being larger than normal, we may need to make special arrangements. So third-party sick pay, remember to submit this before the last payroll of the year. Adding sick pay amounts after January 1st could delay the production of your W-2s or your tax reporting. And when we say third-party sick pay, this is also referred to as disability pay, FYI. Points to consider with this: who is responsible for reporting this on the W-2 to the employee? Is it going to be you or your third-party sick provider? Did the employee pay any portion of the cost or premium, either as a deduction or as a tax? And has the employee been receiving sick pay for more than 6 months, which can affect taxation if it's considered short-term disability or long-term disability? So special pay items. So these next couple slides are going to cover what are some very common fringe benefits. And this first one is going to be dealing with group term life. If you provide group term life insurance coverage in excess of $50,000 for any employee, this should be processed in the employee's pay on the live payroll. And we always stress this because some companies wait till the end of the year to report this information to us, and you don't have to. Ideally, it should start in the beginning of the year, or when the group term life is the person is eligible for this kind of benefit. Um, should be added with or before the last pay of the year to allow the employee to cover the taxes due. So the employee does have to pay taxes on the group term life amount. And again, this is why we say add it as soon as possible to the system. Especially so it can be included on their normal paychecks. So if they're getting paid, their normal salary, having the group term life on there will allow the system to collect the taxes for their salary and the group term life. This can be set up to run automatically with your live payrolls. And if you need help getting this set up, then please reach out to your customer support representative on details. The timing with this, employees need earnings they need salary or earnings to be processed for the tax calculations. Already covered doing this on the live payroll will avoid you having to pay for a special adjustment run. And avoids an additional work on your end and CTR's end. So, there won't be a last minute scramble to get this information in the system. Having this set up on a live pay will just have it, accumulate during the course of the year and be taxed during the course of the year. If your employees are terminated with no live pay the process, then please reach out to your customer support representative for instructions. So worst case scenario, you say, oh, I do have group term life for someone, but they're no longer with us. I need to report it. Reach out to us. I mean, we'll still have to add it to the system. And then we can go from there. There's some taxes that the employee can pay out of pocket when they do their individual tax return. So it's not the end of the world, but still, you know, the earlier the better. Remember to review your payroll register reports with each payroll in case you're automatically and accidentally adding group term life to your employees who have not been terminated in the system. This is really just a general point to review your payroll. Some companies, the employee may no longer be active, or they may be inactive or terminated. But if the group term life is automated in our system, it's still recording that, and your company is paying taxes on it. So just be sure to review your register and make sure you don't have anyone in that situation. Another fringe benefit is a special pay item is S Corp owner's health insurance. So first question is your company a subchapter S corporation? Do you pay the cost of health insurance for anyone who owns 2% or more of the corporation? If you answered yes to the above, then consult with your company accountant or tax advisor. Provide to us any amounts that need to be added and which taxes apply before the final payroll of the year. There are differences among states regarding taxability of these items. Reporting these items after January 1st could delay production of your W-2 forms for all employees and your tax reporting. And PUCC or PUC, personal use of company car and other fringe benefits. So this is another common one. Personal use of company cars when an employee uses a company vehicle for personal reasons, and it is a taxable fringe benefit. Examples include using the company car for personal errands, commuting to or from work, weekend use, vacation use, etc. If the employee uses a car for those purposes, you will need to determine its value and include it in the employee's compensation for tax purposes. There are other taxable fringe benefits and what as well. In general, these are monetary benefits in addition to the employee's wages, basically something separate from their salary. But these are these three are the main ones you'll commonly see. So points for consideration in general with these fringe benefits or other kind of special pay items. If the employee is not receiving any more pays and this needs to be added, how will you cover the employee taxes? And kind of spoiler alert, in some cases, your company may have to pay the taxes, especially if the employee is terminated. You may have to cover, say, the employee FICA taxes because the IRS is, if the employee FICA taxes is underpaid, the IRS will come after your company first and say, hey, your Social Security and Medicare taxes have not been paid in full for this period. You're responsible as an employer for withholding these for employee wages. So we're going to come after you for, the missing tax funds. So that's why we continue to stress any of these items, make sure they're included on a live check to your employees, where the employee has some kind of earnings or salary to cover the additional taxes for these fringe benefits. Another point to consider, are you giving out gift cards or other items that have more than a de minimis value? Now, this de minimis is defined by the IRS. They previously ruled that anything under $100 could be considered de minimis, such as occasional snacks, they use an example, occasional tickets for events, etc. Again, we advise you check with your CPA or tax accountant or advisor to see if any benefits you provide may fall within that guideline. Another point for consideration: do the owners, managers, and key employees need to be taxed on special earnings received? For any of the above, again, consult your company accountant or tax advisor and provide us with specific directions on what tax is applied. Sufficient advance notice needs to be given to us to make sure we are in compliance with those directions. And special pay items automation. So I did touch on this on the previous slides, but many fringe benefits, especially group term life and S-Corp health insurance, can be automated in the system. And again, you can arrange to have these items automatically applied with each payroll starting earlier in the year so that the amounts are accumulating and being taxed during the course of the year. This will avoid the additional work of having to total up these values at the end of the year and potentially miss collecting taxes on your employees, especially if the employees have received the final pay already. And as always, reach out to your customer support representative if you have any questions on setting these up. Help, my W-2 does not match my final pay stub. It probably should not match. So reasons why it wouldn't match: you probably have pre-tax deductions that reduce taxable wages. You may have earnings codes like reimbursements that are not taxable, and the tax treatment of earnings or deductions may not be the same for your state or local taxes as the federal taxes. So this is a common question when a person says, hey, I'm supposed to be getting paid, say, 50,000 a year, but my W-2, my federal wage box says 45,000. What's going on? So how to reconcile this? You or the employee can look at their final pay stub of the year. So under employee self-service, go to their pay history screen and look up their final pay stub of the year. In the tax section of the pay stub, you'll see the year-to-date wages that are used to create the W-2 form, and this is pointing it out. So these should match this year-to-date wage should match the the boxes for the various tax wages on the W-2 itself, and then the year-to-date tax amount should also match the taxes withheld on the W-2. There may be some situations where there could be a little bit of a discrepancy if we had to do some kind of background adjustment, but the vast majority of the time, their final pay stub, if you reference these year-to-date wage columns and year-to-date tax amounts, these should match the W-2. Again, if you have any questions on it, feel free to reach out, but that's a quick way to make sure things match. So reconciling employee W-2s, we have a W-2 reconciliation report. This report can be run at any time, but it's most useful after you've run your final payroll of the year. This is a path to navigate to find the report, reporting, then year-end reports on demand, and choose the W-2 reconciliation summary. Now, this report, if you're familiar with the annual W-3 form, the W-3 form is basically a summary of all your employee W-2s. So if you issued two W-2s to employees, one's, 50,000 on one W-2 and 50,000 on another, the W-3 report will reflect the grand total of $100,000, in wages, and then whatever total taxes were withheld. So this W-2 reconciliation summary, very similar to that, it does provide some additional info. It'll give numbers of W-2s per state income tax. So if you have multiple employees in multiple states, it'll show that you have 5 W-2s for the state of Pennsylvania, 4 for Ohio, 6 for New York, and so on. It'll give a full breakdown of all the state, local, and federal wages and taxes withheld as well. So it's more detailed than the W-3. So it's a good resource when you want to review all that information. Paperless forms. So this covers the W-2, the ACA forms, and the 1099 forms. We have a feature that offers your employees the ability to opt out of receiving all paper year-end tax return forms. When this feature is turned on for your company, employees will be presented with the option to opt out, and the next time they log into their employee self-service. Employees who opt out will be able to retrieve an electronic copy of their year-end forms under employee self-serve. This is a path in iSolved, employee self-service, W-2, ACA 1099 forms. Frankly, they can always go here, even if they still opt to receive the paper copies of the forms. This is always available to anyone, whether they are doing electronic only or just paper copies. We will post the electronic copies of the forms on approximately January 15th, 2025. This is a tentative date right now, and it's subject to change, but that's what we're aiming for. More with paperless forms, verifying if this feature is currently active for your company. If you would like this feature turned on, you must notify us before you process your last payroll of 2024. Many employers have already chosen to activate this feature within iSolved, and you've already notified us. If you're unsure whether you currently have this feature activated and whether employees have already opted out of receiving a paper W-2, you can navigate here in iSolved. It's reporting, client report, electronic tax form delivery status. And this is basically a spreadsheet that there will be a date field, and if it's empty for your employees, then you are not offering this service, or no employees have opted out of receiving paper copies. So this basically tells you if you have someone that opted in to being electronic only. If you do see a date field next to the name of some employees, that means that the employees have opted out of receiving the paper forms, and they'll just get electronic only. Employees must accept before the last payroll of the year is processed. So if they want to be electronic only, they must accept and opt into this feature before, again, the last payroll of the year. Terminated employees will always receive a paper W-2 form. So paperless forms, reminding employees who have opted out of getting the paper forms. You may have employees who forgot that they have opted out of receiving paper forms. We recommend that as good practice to send a quick email notifying the employees where they may retrieve their electronic year-end forms in their employee portal. So on that last slide, we covered that report that you can run to see who's getting electronic forms and who's going to be getting paper forms. So if the employee is getting a electronic form, they can go here, employee self-service, W-2, ACA, 1099 forms, and to get a PDF of employer copies for you, you can go to reporting, year-end report archive, 1099, copy C employer. This is for 1099 forms, or ACA 1094C, 1095C employer, or W-2 copy D for the employer. This will provide you with a PDF of all employer copies of tax forms for your employer records. So for you as an employer, you can going with this point, you can go to this path, and also this path as well. You also have access to the employee self-service for your employees. We'll be covering this towards the end of the presentation, but we have a year-end resource page that provides not only just a copy of this webinar, but our year-end planning guide, as well as information on going paperless with the W-2s. So for this particular subject, the guide will tell you what you need to do, and also a quick employee guide that you can share with your employees. So year-end tax forms electronic delivery, the year-end report archive. Employees that are not receiving a printed W-2 will not appear in the W-2 pressure sealed report in the year-end report archive. You will only see W-2s for employees that received a paper copy of a W-2. If you want to see your full W-2 list, you'll want to access the employer W-2 copy D. This will include everyone, whether they're getting an electronic copy or they're getting a paper copy. The employees that are electronic only, when you open this, you'll see this watermark saying ESS copy only. So that'll let you know that, this person opted in for electronic and you did not send a paper copy. Masking Social Security numbers on year-end forms. In order to protect employees' personal information, the IRS allows employers to mask the Social Security number on employee year-end forms, including W-2s, 1099s, and 1095C forms. If you would like to add the masking feature to your year-end forms, please contact your customer support representative before you process your last regular payroll of 2024. So again, kind of like what we were covering on previous slides, if you're going to be making a change like this, make sure you reach out to us before you process your last payroll of the year. The employer copies of the reports will not have the SSN masked. This is an all or nothing feature for all employee copies of these forms for your company. So we can't mask an SSN for employee number 1, but then show it as, show the full SSN for employee number 2. It's going to affect everybody. And again, this masking is for the copies you provide to your employees. The copies that we send on behalf of your company to the tax agencies, they have to show the full SSN. So this is more of a security thing for your employees, especially if you're worried about mailing a W-2 to someone and having that SSN visible on the W-2. Year-end tax form electronic delivery. The ACA form employer copy will also have the ESS copy watermark in the upper left-hand corner. So similar to what we just saw with the W-2s, if someone is doing electronic copies only for their 1095C forms or ACA forms as well, you'll have this watermark on there. So TurboTax, iSolve started this for sure last year, and I believe the previous year as well. This is a free service. There's no cost for it. There's nothing you need to do for this integration, except make your employees aware that they can do the import if they choose. This service is, by default, it's turned on for all of our clients. We do have the opportunity to turn it off if it's requested. A small change to this year is that the employee will see this TurboTax information as soon as when they access their W-2. So employees that utilize TurboTax will be able to easily import their W-2 during the tax filing process. When the employee goes to self-service, the first page of their W-2 will show like below this screenshot. No employee information is shared with TurboTax until the employee requests to import their W-2 information from iSolve. So TurboTax is not getting a hold of the person's information unless they specifically request, TurboTax to actually import the info from iSolved. Approving ACA forms. Once you finish previewing your ACA forms, scroll through all the pages to make sure no error report log. You must then approve your forms in iSolved. You may preview and approve your forms on the ACA form approval screen displayed below. Approving the forms will commit the forms to the year-end batch print for the Service Bureau printing and filing. If you fail to approve your forms in iSolve, CTR will not be able to produce or file your ACA forms. So it's crucial that you complete this final step. Note that the ACA forms will be printed and shipped separately from W-2s, so they will not be in the same package. You can get those and you will get them in two separate packages. All of your ACA forms must be approved by January 9th, 2025, but also do not approve your forms before December 31st, 2024. So within that window is when you want to do your approval. And this is our year-end checklist. This is included in our year-end planning guide. So we put some important items on here as well as due dates. As soon as possible is basically what we covered with the group term life and or fringe benefits. You've verified you have the appropriate taxation and W-2 box designation. I understand this must be entered into a live payroll and actively paid employees before the last payroll of the year, etc. Some other items: reviewed your processing calendar to determine how the upcoming holidays may affect your process and pay dates, which we covered earlier. To review your holiday schedule and ensure payrolls will be delivered on time. So this is another thing. We didn't specifically mention it on previous slides, but it's something you want to keep in mind as well. Often in the holiday season, there can be delays in shipping from FedEx or UPS. So definitely keep that in mind. And again, running payroll, the earlier is usually for the better. Another item to preview your ACA forms if applicable. Some more items as well, verifying any employees that have opted out of paper year-end forms such as W-2, ACA, and you've reminded them if necessary. Bonus payrolls, and then some other items as well. I won't go through all these, but this is part of our year-end planning guide. And our year-end resource page. We also have a year-end resource page, which I briefly spoke about previously, which can be found at this address. This page will cover a variety of year-end deadlines as well as providing guides, including the year-end planning guide, this webinar and checklist, and any other recorded webinars as well. This is a small screenshot of the page with some dates that we've provided as well, some deadline dates. And towards the bottom, you will also see some items that you can click on for guides. Anything that we've covered and we feel is important, you can click on those and download those items. And that wraps this up. If you have any questions, as always, reach out to your customer support representative. If you don't know who your representative is, then refer to the client landing page for their contact information. This is our general phone and fax number. And for your support representative's email, see it on the landing page as well. So that is all for today. We thank you for joining. Look forward to getting through this year end with you. And any questions, as mentioned, feel free to reach out and we will go from there. Thanks, everyone.